Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, lucky January the 13th. Before we start, please join me at the Money Show in Orlando, Florida, February 8th through 11th. I will present a session on February 10th, Buy Low, Sell High, Power Up Your Profits with Active Investing. For more information, please go to worldmoneyshow.com. And now on to the market. U.S. stocks were higher this morning in trading, boosted by bank stocks after better than expected quarterly profits from Bank of America, Wells Fargo, and J.P. Morgan. All of that bode well for the rest of the earnings season. 7 of the 11 major S&P sectors were higher, with the financial indexes 1.4% rise leading the advancers. The combined profit of S&P 500 companies is estimated to have risen 5.7% in the fourth quarter, largely helped by financial companies. U.S. stocks overall have been on the rise since the election, on optimism that U.S. President-elect Donald Trump's policies to boost infrastructure spending and reform corporate taxes will benefit the economy. Also, by the way, this morning the Nasdaq hit a new record high. And with all that news behind us, now let's go on to 3 charts that could give us some insight into the week to come. First of all, as we normally do, we're going to look at our daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely tracks our S&P 500 index. Now we know that the SPY itself made a new all-time closing high on December 13th of $228.34. As you can see, the SPY is still nicely trading above its 20-day moving average, the red line, the 50-day moving average, the green line, and the 200-day moving average. Of course, the SPY moved to this new December high, then pulled back gently into the end of the year, still maintaining the uptrend line we see that I've drawn on this chart, pulled back to about 222 here the last day of the year, then rebounded, moved back up almost, not quite, but back almost up to its prior all-time high. Now, for the last week and a half, we've been sitting on this trading range here from about 226 to 227 and change, just actually going sideways here. I think this market is still in wait-and-see mode. It's still deciding what it wants to do. I know that the direction of the U.S. dollar is in play now, and earnings season. I think the SPY is waiting for earnings season to see just exactly if earnings will rise that 5.7% that the analysts projected. And so we have to see if earnings season gives it the impetus to move higher, break out above 228 here, or if indeed at some point it has to break down for a little profit taking, maybe toward the 50-day moving average, which is coming in here at about 223 right now. Of course, if it does break down a little bit and succumb to profit taking, that will give us a lot more opportunities in upcoming weeks. So either way works for me. The RSI here is just above the 50 line, totally neutral, pretty much so for the MACD. So we'll have to wait and see what the rest of January brings. Our second chart today, we're going to continue for a little while here watching the iShares Russell 2000 IWM ETF. IWM is the symbol, and as you all know, I watch the IWM. It tracks the iShares Russell 2000 small cap companies, and I watch it because it can be a leading indicator as to where the broad market goes. As you can see, when I captured this chart today, it was trading at $136.60. Certainly still positive, trading just above. You'll see it's starting to struggle now with its 20-day moving average, the red line. It's starting to struggle with this, dipping below it. The 20-day now is no longer moving higher. In fact, it's moved ever so slightly lower, mostly horizontally here. So when we see price on any chart start to succumb a little bit to the 20-day moving average, we want to keep an eye on that then, and then really start watching the 50-day moving average. The 20-day is more of a short-term trend line, we can almost call it. The 50-day moving average, when price is above that, that's more of an intermediate term line. Price over that is in an uptrend in the intermediate term. So I'm keeping an eye on this IWM, especially going into next week. I want to know if it can hold above 134.50 here. That's very important. The all-time high it made at 138.92 on December 9th. It hasn't yet, as you can see, been able to move back up there. The RSI here has been trending slightly organized, but slightly lower since that December 9th high. And that would be ditto for the MACD, which has moved down. The MACD is under the signal line, moving down ever so gently. Now, could be again that the IWM can move higher if good earnings come in. That's certainly a potential. Could move higher over 139 and continue in the uptrend it's in. Or if the market decides otherwise, we could pull back here to 134 where the 50-day moving average is coming in. And down perhaps even a little lower. There's also support that goes back to right back here to about 131 where that pivot low was in at the end of November. So all in all here, even if either one of these indexes pulls back, we do have a good bit of potential support. And again, it would give us more opportunities going into the future. So keep an eye on that 134.50 though for the IWM in the coming week. Our final chart today is a chart of an average we haven't looked at in a long time, the iShares Transportation Average. This is the ETF and the symbol is IYT. Now, you all may know that oil's starting to weaken just a little bit here. Transportation did very, very well here since the November election, did very, very well. And it moved up to a high here, the IYT did, of 147 from 139. You can see back here just about all summer it moved in a low base down around even below 139. It moved in this kind of a low base through July and August. Then it moved up to creating a slightly higher base here in October and into the first part of November. When you see this particular pattern, I call it a base on a base. And when you see one base build, this sideways consolidation, pretty tight here, pretty orderly, one base build, then you see price move up. It did do a head fake here and move down, but it started back up again. And then just slightly atop this prior base, the IYT built this base in October, November, just slightly higher. So it's almost like a building a foundation here. Then in November, as many things did, the IYT started up dramatically higher, moved from, as I said, 145 up to about 171. Now, in this particular exchange-traded fund, top components are FedEx, UPS, Norfolk Southern, United Pacific, JB Hunt, and all the airlines, of course. Again, lower oil prices, if that comes true, are good for transportation stocks. The IYT is pulled back here to about 162, rallied a little bit in the last few days. Got a nice volume spike here 3 days ago. If you look down here, you can see it right there, right about Tuesday. So at any rate, the IYT is trading now today just above its 20-day moving average, definitely above its rising 50-day moving average, certainly above its 200-day moving average. The RSI here is neutral and hooked up very slightly, which I like. The MACD is neutral above the 0 line, but certainly the MACD line's below the signal line here, so we'll keep an eye on it. I am looking at the IYT here as a possible potential buy here if it can start moving higher into next week over this 165.44 level, perhaps up to 165.50 and 70. If it can continue to move higher here, of course, you know I will not want it if it moves below the 50-day moving average. So if it moves below 161, 160, I will not want it anymore. But if it can move higher here in the upcoming week, potentially, and that would really help if oil moves lower, potentially the IYT could move back up into and toward the $170 level. And now we'll go on to next week's economic reports. But first, please join us this coming Tuesday, January 17th, for our next session of Tony's Market Club. Now, we usually meet on Mondays, but because of Martin Luther King holiday this coming week, we will meet on Tuesday. We will talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low priced, high value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available a few minutes after the session ends to all of our members. For more information and to join, go to tonysmarketclub.com. tonysmarketclub.com. And now on to economic reports. Please know that we are heading into the biggest 3 weeks of earnings season, and results from high momentum large cap companies will definitely move the market. So please keep that in mind along with the economic reports, and we don't have that many this week. On Wednesday, we have the CPI, or Consumer Price Index. We also have our weekly crude inventories and the Fed's Beige Book. Thursday, we have housing starts, building permits, the Philly Fed, our usual jobless claims, and usual natural gas inventories. And not much going on economics-wise on Friday. Again, please join us for Tony's Market Club this coming Tuesday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.